Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Yu. And what I want to talk about today is a theme that we're addressing more and more in what we write about on the site regarding what to do with these MLPs that have really gone up so much in price. We did take some profits on Navios. We actually made a sale of the Williams partnership. The question a lot of people get is what do we do, or are these MLPs, have they gotten too far ahead of themselves? Should we go ahead and buy above the buy targets, or should we just wait and see what happens? And option 3 is pretty much still where we see things. There are instances where companies will increase the buy target on those companies if they're able to show us more earning power or increased dividends. That actually happened with Enterprise Products Partners, also Kinder Morgan Energy Partners, and both of those situations are described in the article that's up on the site now. They both made major acquisitions in the Haynesville shale area that have quite a bit of additional build-out capacity. That means more cash flow, that means higher distributions, and they continue to do these kinds of deals. They're uniquely situated because they are large MLPs, so they're able to do more deals. They're able to raise capital more cheaply than perhaps some of their rivals can, and by extension continue to grow. So we've raised buy targets on both of those. Again, you can check them out in the issue, and if you haven't bought any of those yet, this would be a good time to do so. On the other hand, we would urge caution with some of the others out there, like Spectre Energy Partners. Really like this company a lot. I love the parent, Spectre Energy, which is doing a bunch of deals. This Spectre Energy Partners is going to see a lot of very valuable asset drop-downs from the parent. That means higher cash flow, that means higher distributions. But here at a price in the low to mid-30s, I think it's somewhat outrun those prospects. Actually doesn't yield a whole lot more than the parent does at this point. So that's one, we keep it in the portfolio, but we would advise holding off on making purchases of that one. And if you look down the list of the portfolio companies, this most recent article does round up what's going on at all these companies, where their buy targets are, why we are or are not increasing those buy targets. I think you'll find it very useful reading, particularly as we seem to continue to move onward and upward with many of these MLPs. MLP sector is very, very popular right now for obvious reasons. A lot of uncertainty regarding dividend taxation, so this is one of the few areas out there that there is some certainty and some surety that taxes won't be going up on it. In fact, as we pointed out, much of the dividends of these MLPs is return of capital. So you don't owe any taxes on it until you sell, and then it's a capital gain, which is a lower rate than income. So in any case, be patient with these things. Stick with the ones that have good businesses. We will be upgrading or raising buy targets on some of these as they begin to show more dividend paying power, and we'll continue to do that going forward. But until they do show that, you're best off not jumping in. This is a yield chasing market. People buy things that have big yields attached to them. People don't really pay that much attention to the underlying businesses of these companies, and that's a formula for trouble. But if you pay attention to what's going on at these companies, you can see where the value is, you can see where the value isn't, you can make prudent purchases. That's all I have to say today. Thanks for tuning in. I'll look forward to chatting with you next time.